So many aspiring real estate investors get into real estate with the idea of flipping houses. But our guest today, Tyler Goble, is a recovering house flipper. He's the founder of LTG Investments, and he's going to tell us why he stopped flipping houses and what he and his wife are doing next. So, Tyler, I'm really excited to hear your thoughts on, why you abandoned this strategy that was so successful for you.
Yeah, thanks, Brian. So, um, real quickly, like, no shade on people that are flipping houses. They're
Of
being super
course.
successful. Like, you can definitely make a whole lot of money doing that, but you can also pay the government a whole lot of money doing that. And there's ways to like mitigate your tax benefits and invest passively in other deals. But in reality, flipping houses isn't really investing in real estate. It's more like you're like selling a commodity, basically, and you're really, really at the mercy of the market. In my background, I'm also a data scientist. And so when we were flipping houses, we were almost always acquiring deals in an area where we knew what the price point was going to be. We knew what median price points were, and we would stay below those things. And we did pretty good. We did over 20 some odd houses in a period of about a year and a half in the Central Texas market. And the thing that I don't love about flipping houses is it's such an emotional decision for people when they're going on the buy side of that. And so when it comes to buying the house, you don't have as much control as you'd like to think about what that pricing ends up being. And my wife is a designer, like she's an architect. And so these houses were beautiful. But we had multiple houses that would sit on the market. And you're like, this is a great house. But because of different market conditions, those houses ended up sitting. And so you lose a little bit of that control over forcing appreciation in a big way, the way you can commercially, as well as you kind of lose control of some of those variables when you're doing heavy rehabs, to where when you don't know what's behind those walls, you could easily blow through your budget. And we blew through our budget just about every time, but we would always have a 20% buffer on top of our numbers. And so very rarely did we come to a position where it was like we were wrong in every direction, but we had a couple that we were wrong in all the directions. So we were wrong in how much we could sell it for, wrong in how much it was going to take to rehab that property, and then also wrong on how long it would take. And so like that's like the three kisses of death in flipping houses, is getting all three of those wrong. And if you do enough houses, that tends to happen. Um, and so we've started to transition into more of a build mode. And so what we like about that method is it's still similar to flipping houses. However, you have a lot more control over all your variables because you're actually the one who's laying that foundation. You're the one who's putting in the electrical and doing all those different things that you can really understand your fixed costs. But talking about controlling the environment, if you buy enough houses, you can kind of create your own market and set your own comps inside of a different neighborhood. And so we're starting to explore the new construction spec home model, as well as some kind of build to rent thoughts, to where you just have a multitude of different exits. So yeah, that's kind of recovering house flipper. Like I tell people if they're wanting to start out in real estate, I'm like, flip some houses, find a way to hold on to your money, and then stop doing that as fast as you can. Because at the end of the day, it's not really how you build wealth.
Yeah, I mean, I've done a little bit of house flipping, back when I was an active investor, and it is a great education. You learn those lessons very quickly because you have to, and they're expensive lessons if you don't get them right. So yeah, it is an education. You can learn a lot of the different facets of real estate investing from that, including what I think is the most difficult part of real estate investing, which is managing contractors. um, but yeah, I mean, to your point, the market can shift on you in those 4 to 6 months that it takes to renovate a property, especially the heavier rehabs, right? Whereas, when you do new construction, you can do build to rent. You can build with multiple exit strategies in mind. And I like you mentioned that you can scale when you are building out, entire developments. For example, you can control the market to some degree. So I love all that. Tyler, in 30 seconds or less, how do you help people, and how can people connect with you if they want to take you up on that help?
Yeah, so we do place some investments into the developments that we're doing. When we were flipping houses, it was all private money and local banks. And so with the new construction stuff, we'll probably be offering some of that stuff to our friends and family and all that kind of stuff in the near future. But yeah, we also are super passionate about fighting trafficking. And so I know we didn't get into it here, but we do a lot of work with anti-human trafficking stuff. And so if you want to talk about philanthropy and capitalism, or if you want to offset some of those gains that you made from flipping houses because you're smarter than I am, I've got a great nonprofit you can donate to.
That's awesome. Well, Tyler, thank you so much for joining us. And guys, if you enjoy these quick, focused conversations that we have, please rate and review the show. It makes a world of difference to us. And on that note, we will catch you next time. Want the cash flow, appreciation, and tax benefits of real estate without becoming a landlord? You've heard of REITs and real estate crowdfunding, but you probably don't know much about 5 other ways to invest passively in real estate. So we put together a free video course for you to show you how to consistently earn 15% plus returns from 5 lesser known hands-off ways to invest in real estate. And even more importantly, we'll keep risk front and center in that whole discussion, because really, what's the point of investing for high returns if you also take on high risk, right? So visit sparkrental.com/free to take our free course. Each video is snackable at 10 to 15 minutes long, and the entire course takes less time than watching a movie. Looking forward to chatting with you from within the course.